Here. Well, hey traders, welcome to today's event. My name is Jim Simmons, and I am joined by the ever infamous Mr. Sean Kozak, and he's here with us as well. And we're going to be looking at today's support and resistance and how to find support and resistance locations that are actually reliable and with some serious confidence. Looking at the demos that we're going to show here later in the strategy is really top level stuff. And so you guys are in for a real treat. So thanks so much for joining us, everyone. Before we dive in, of course, we have our disclaimer. We have no interest in the outcome of your trades. We are here for products and services for educational purposes. And there is risk involved with trading, so please understand those risks. We are recording this event, and so we'll send the recording out, and you can watch this as much as you need to and really get a hang of the strategy that we're going to show you here in a bit. Also, if you have questions, please feel free to ask away, and we would just ask that we keep everything chatty and chat in the chat box and everything. It makes the event a lot more engaging and fun for everyone if you're involved as well. So thanks again for joining us, and let's go ahead and jump in. So first we'll do quick agenda. Of course, that's where we're at. Talk about support that's not so supportive. And then we're going to turn on the lights, look at structure zones, supply and demand zones, order block zones, trap zones, all in one automated support and resistance. We have a tool that does all of the above for you. Software demo, live examples, special pricing, of course, because you've joined us. We'll make it worth your while, and then we'll do some Q&A. Okay. So jumping right in here. So why is your support not so supportive? Well, the major problems with support and resistance, traders don't know the difference between what is considered strong support versus weak support. And that's a general statement, but a lot of traders don't know. Weak support causes a reaction in the market, but strong support causes a reversal or a rotation. So how do we determine how to find these opportunities in these support and resistance zones? So we have here a look at an example here. We've got some small reaction at weak resistance. We can see that the market comes up to this wick and gives us a little bit of a reaction on the downside, but it's not enough to actually break through the lows of the market. And so that would be considered weak support. And what is really powerful is knowing when this is going to be weak support versus strong support. And we're going to take a look at how to do that. Okay. We also have here, this is the same exact chart. We can see that strong support is at the lows because we broke through the weak support. And then we come all the way back down, test the strong support, and off the market goes. You can see a strong reaction there. And again, we'll show you how to find the difference between them. So how do you plot the support before it happens? That's what we really want to know. Most of the time, we can see support and resistance. The problem is we don't realize that it's support and resistance until after it's been proven. Well, what good is that? Because if you don't know that it's support or resistance coming into the trade, you're already behind. And the whole point is we all want to get ahead as traders. We all want to get there before the market does, right? We got to know where to enter our trades. That's the main thing. So major problems with support and resistance. Well, traders aren't trading support and resistance correctly. They're using useless tools blindly for reversals. They're trading the same levels over and over and over, continuing to expect the same reaction. By the time they figure out its support, again, they've already missed out. And they trade support as if it's some sort of number written in stone, as if it's some sort of thing. Well, the market has to do this because it's always done this, so it has to do it again. The market doesn't have to do anything. All you need is a statistical edge, but you can't trade support as if it's written in stone. It's not a single level, it's an area. So traders know they need support and resistance, but I probably speak for a lot of us in the fact that we probably gave up on support and resistance a long time ago because we couldn't find a solution that works, right? How many of you have been in that situation? You know you need support and resistance. You know you need to mark out where the market's going and where you think you'll get support and resistance. But how many of you realistically don't even do that anymore? Just type a yes in a chat box if you've given up on that. If you figure, well, it's not working for me, so I'm just not even going to plot it. Yeah. So they don't believe in their ability to plot these levels because they don't know what works. There's a lot of different options available to you. When plotting support and resistance, it's kind of like the way I look through it is walking through a minefield at midnight. The only time anyone turns the lights on is when things blow up in your face. And we can see here in this example, this is kind of the typical example of support and resistance. We see support at the lows and we go, oh yeah, I see there's a support. So obviously we're in a ranging market, right? The market's bouncing around, bouncing around, bouncing around, and it's really got no direction. So when it comes back here, you're going, man, I got a ranging market. This thing is primed. I'm going to take this trade. I'm going to put a ton of contracts on because that's what I do as a trader. You put your ton of contracts on, you're only looking to take it right back up to these lows in here. And what happens as soon as it gets to that low, they break through and they take it all the way down. And you go, oh crap, there goes my stop. All right. We've all been subject to that before, but no more of that, right? That's what we're here to do. So trading support and resistance based on market structure. One of the features of this tool is that you can trade based on the structure levels. These are going to be based on pivots in the market, and you can see that this is plotting it automatically in real time for you. Then we have support and resistance based on supply and demand concepts. Arguably one of the most important things that you can know as a trader, or one of the most important concepts, is understanding supply and demand, and more importantly, understanding how to trade it. Because of course, knowing how to trade something is very, very important. And this is one of the most powerful concepts in trading for sure. This tool will do that for you. It will plot these zones automatically for you. So if we take a closer look, we've got an area here. There's our demand zone, and we can see that it's respected. We've got a demand or a supply zone here. We can see that that area is respected as well. And notice we're not expecting the market to just bounce off of this level and go to town, right? We're not looking for something that's just going to go right back into the zone and take off, because it's just not realistic. And you got to have a stop, and you got to give your market some breathing room. Okay. Moving right along, we've got support and resistance based on order blocks. And again, this is a very, very powerful understanding, a very powerful concept. Once you understand how to trade this can provide some seriously incredible trades. I've been trading this one personally for a little bit now, and I'm really enjoying it and really starting to get the hang of it. I think there's some really incredible trades with this software. So we've got you can see right here, we've got an order block zone that's right here, comes right back into that zone, and then off it goes. We've got another zone right here, comes right back into the zone, and off it goes. I mean, if you can see that type of an edge in the market, that's pretty powerful, pretty powerful. Stanley's asking what's an order block. I'll let Sean explain that a little bit better. It has to do with supply and demand concepts, and it's really, it's a pattern in price action. But it's based on supply and demand concepts. I'll let Sean elaborate on that once we start going into the demos and stuff. Okay, but you could see some seriously killer trade opportunities based on these zones. Very, very nice, very powerful. Moving right along, trap zones. How many of you are familiar with traps? Well, this will plot all the traps on the chart for you as well, so you know what you're looking at in terms of the market, where you might find potential resistance, potential support, so on. Let's look at some real trades. We have some examples of some of our traders who have actually taken trades with this software already. The idea is you've got supply and demand, right? And then you've got traders that are trading this, that are taking money out of the market. Here you can see this is going to be that's going to be a zone there. And it looks like in this case, they're actually trading, the order block, which is right here. And so you can see there's the trade, and then there's the targets that they put on. So winning trade right there. Let's take a look at the next one. There's more trading, winning trades. There's another order block. You can see the order block printing right there for you. And they're taking a trade up in here and profitable trade. We can see another one here. We've got another zone trade. And this is actually a zone within a zone. This is a zone that was plotted on a higher time frame, and then another zone inside of that zone. So you could certainly use this with multi-time frame as well. And that could be a very, very big edge for you as well. And then we have another trade going on a short. We've got a sell trade right here off of an order block, and providing some really great opportunity there. And then one more for fun. We've got another zone that provided some good resistance. Now notice this one, it came into the zone a little bit, and that's why we say it's, nothing is a sure thing in terms of trading. There's no such thing as an exact number. Okay, but rather than listen to me talk for the whole time, we're going to actually take a look at some charts. We're going to look at some trades. We're going to look at some strategy so that we could take a look at how to trade with this. So Sean, are you still with us here?
Yeah, I think so, Jim. Thanks for that ramp up there and introduction. Can you guys hear my voice for a second? I just want to make sure you guys got me, and just want to make sure that you guys can hear me okay. I'm going to take the screen, and we're going to
clear.
Yeah. I can't, there we go. I can't, there we go.
Try now.
Yeah, let's take a look at that. Let me know if you guys can see the screen. Okay.
Yep, looks good on my end.
You guys got me. I'm going to open up the chat box here for a second, and I don't need the participant window, just the chat box. Okay.
Yep, good.
So Jim went through that rather quickly on purpose. You can tell that we didn't want to sit into the slides and sit there and waste time. Everybody can watch a slide or go back to the launch webinar when we did the event and we talked about the release of the Unizone software, etc. I really want to drive home on, first and foremost, what's being done from a software perspective, and then understanding why we would want to use it, what it's doing for us, and then we're going to put a strategy in place. And there's many different ways to trade, and I think that there's like Jim said, there's many ways to skin the cat. But before you understand something, like, you're never going to get into a car and appreciate the drive of the car if you don't understand what it's doing, right? Like I'm a Porsche guy. I love Porsche cars, and but the only reason I like Porsche is because I understand the engine. I understand what's going on behind the mechanics of it, right? So if I'm going to expect anybody in here to want to use software to trade with, anybody can get behind a mic and say, hey, take a look at this winning trade, and hey, take a look at that amazing setup, and hey, fluff. Can we all agree that we've all heard that, right? But you're here to get 100% actionable strategies. Can we agree with that? Like if you leave this event right now, the only reason you came here is to leave with an opportunity to make some very, very good opportunities work for you in trading, correct? Like, you're looking to make money. And if you're going to make money, you need to be able to follow something you believe in. Can we agree with that? Can we make that make sense? Give me a yes if that makes sense. Yes? Right. You're not going to put on a trade if you don't believe in it. You're not going to trade something you don't trust or you don't think that has merit. Okay. Well, what I'm going to do is I'm going to explain these three things in a nutshell. Okay. So supply and demand is not a new concept, but what our software is doing is it's identifying imbalances versus breakouts that are driven by imbalances, like driven by order flow in the market. Okay. So what the software is doing is it's going to look for 50% range bars and thrust candles. Okay. And what we're going to do is we're going to explain what that means here in a second. Okay. We're not going to talk about how to trade it just yet. I just want to make sure you understand the power here, so we can just kind of go in and do this. And I'm going to be quick because I think the real meat needs to be in the setups, not just in the software. So if you've got a candle, okay, and you got a wick, right? What our software does is it looks at the difference between the different candles and it's looking at, the range of price and the body of price. We're looking at, because every candle is not created equal. Every software, every candle is not created equal. So what we want to do is we want to identify when you have consolidation, whether that's on a 1 bar basis, a 5 bar basis, a 50 bar basis, whatever the case may be. And then what it does, it looks for the consolidation. And then what we're going to do is we're going to get a breakout to one side, or we're going to get a breakout to the other side. Well, why is that important? Well, first of all, I'll show you what that looks like. Let's grab a 30-minute chart for a second. I'll just show you an example of what that looks like, right? I'm going to go in here and we're just going to turn off everything. We're going to put on our software for a second. Our software is going to identify the candles first and foremost, because the bars are where it starts. And then what we're doing is we're identifying the white candles are the bars that are approximately 50% or less of the high-low range. So whenever you have a candle that is 50% of the high-low range, it's because price went up and down in that candle, and then it stayed there. The body stayed in a certain period, or it was like down at the bottom, right? Or down at the top, right? It's the difference between a candle like this and a candle like this has a lot to do with what we call building positions. When the bar stays in a narrow range like this, and you get 1, 2, 3 narrow range candles like that, it's because the market is consolidating. Well, the only reason the market consolidates is because it's building orders or it's facilitating trade. When one side of supply or demand depletes, it can only go in that direction. If supply depletes, demand will overpower it. If demand depletes, supply will overpower it. So when we have a demand increase, you're going to get a big giant green candle, or you're going to get a giant red candle, right? And you're going to see these patterns happen, right? So our software is first and foremost going to identify supply and demand zones, okay? And that's the foundation to imbalance trading. It's kind of like the first runner, right? It's the first first responder, so to speak. How many of you guys are familiar with supply and demand? Give me a yes if you've heard about it, you understand it, you know about it. Are you guys there? You guys alive? Perfect. Okay. The next one is order blocks. Well, most people don't know what an order block is. Order block is a different form of supply and demand. Okay. And there's two types of order blocks. There's engulfing order blocks. And then there's last opposing candle direction order block. Now our software only does the engulfing order blocks at this time. However, we are adding the last opposing candle direction order block, and I'll just show you how to do that manually, but it's not important for today's event, but we will be adding it. So anybody that's using our tools will have the enhancements, or you can come into the classrooms and you can see that, etc. But what an order block is if you have a down bar, okay, you have a down bar, and then you have an engulfing bar that surpasses the other bar. That's an engulfing order block. So you say, well, it's an engulfing candle. Yes, it is an engulfing candle, but it's considered an order block based on location. So every engulfing pattern means nothing. So when you have engulfing candles all over the place, they don't mean anything. It means something in context to where the location is. And that would be considered a buy order block, right? If you had an up candle and then a down engulfing candle, you would have what we call a sell order block, okay? Now, there are going to be times when you don't get an engulfing order block and you get what we call a last opposing direction. So I'll give you an example. The market's going up, it's going up, it's going up, it's going up, right? And then all of a sudden, the market goes down from here. Well, when we have the last opposing candle, what we normally will do is we will look in these types of locations for the last up bar before the down move, right? Well, that doesn't necessarily need to be an engulfing order block. And so one of the things that you're going to see me do today is we're going to talk about what that looks like and how that works. It is something that most traders don't know exists, and how that essentially works. And now there is one other form of what we call. I would like to think that there is. This should be treated differently. Traps and imbalances should be treated differently, and we're going to talk about this. But there's something that most people don't understand. Okay, and it's called breaker zones or breaker blocks. Breaker zones and or breaker blocks. And all a breaker block or a breaker zone is a broken level that becomes new AOIs. So I'll give you an example. Let's say you get an up bar and then you get a down bar. And then the market comes down and trades down, and then it busts through. Okay. Well, that was a supply zone that now becomes a breaker block to the other side. And if you had, let's say, a last down bar before the up move, right? And then you get a demand zone there and it trades up, and it breaks through, and then it comes back and retests it. That's called a breaker block. Now, the thing most traders don't realize is that there's many different ways to trade support and resistance. So you notice how the topic of this webinar is, support and resistance, because everybody says supply and demand is different than support and resistance, and support and resistance is supply and demand. But at the end of the day, they all serve the same purpose: buy location and sell location. All we're trying to do, AOI means area of interest, Richard. An area of interest. All we care about is whether we want to be buying it or we want to be selling it. And that can mean I'm going to buy a good level of supply or demand or sell it, right? I'm going to use an order block, or I'm going to use a broken level that becomes a new area of interest, right? These are all opportunities that can be utilized when you have somebody that can teach you the right way to do it. Now, the number one problem with all traders that use supply and demand or support and resistance is that they use it in the wrong context. Scalpers will use it in the wrong way, or swing traders will use it in the wrong way, or the location is wrong, or the direction is wrong. And so what I want to do is I'm going to give you a rules-based, like literally 100% rules-based mechanical way to find badass huge R multiple trades today. And we're going to do that using a combination of these, okay? And the only thing I want to talk about is the traps and imbalances. So a trap and an imbalance, all a trap is an imbalance. Let's say you get an order block, okay? You get an engulfing bar, okay? So you get the buy order block that comes in here, okay? All that this means is that as soon as we close, okay, we open, and then all of a sudden, we get another candle that comes up, but there's a space between here and here. So let's kind of go in and show you what that means. And it's a trap, it's an imbalance. And I'll give you an example. This is what we consider an imbalance right here. You see how we have the low of this wick and the high of this candle? This entire space is an imbalance, right? Same thing here. Like if you look at this right here from this area to this area, this is considered an imbalance. Price never traded in there as it left out of it, right? It literally, we closed through and we never came back down to test it. So these are called traps and imbalances. And so these are all different forms and ways in which the market can find liquidity. The market can find areas to do business, but it doesn't necessarily mean it's the right way to trade. So you say, well, that doesn't make any sense, Sean. Like, what are you talking about? So traps and imbalances are highs and lows that don't trade into each other after price reactions. Okay. Now, the reason I'm writing this down is so that I can be both educational and demonstrational at the same time. Let me just kind of show you what this looks like on the chart. Okay, so I'm going to just go through a real quick demo, real fast, real simple, and we're going to get into this. Okay, so let's turn off all the software for a second. Okay, you got a brand new chart. Okay, you guys can see this. So the first thing I want to do is I want to turn on the traps just to show you what the traps look like. Okay, so let's go in here, traps on, fresh zones, tested zones. There we go. So there you go. So you can see that these are different levels of traps that were there, and you know, depending, you know, these are broken zones. This is a large chart. This is a 30-minute conversion to volume on up, but you can see these are zones that were traps and imbalances. Does that mean we should go and trade them? No, by God, no. Like, you don't just go and trade every single zone under the sun because the software does something. Okay, many different traders use zoning software for different reasons, right? Let's go through and give you another example of a different type of a setup. Supply and demand zones. Let's go and turn on the calculator. Our software will highlight the candles. It'll locate the different bars that are identifying where the imbalances are. And then we're going to identify levels that can be traded. So could we turn on some fresh areas of interest? Could we turn on some tested levels? You can see now we've got some tested levels of supply and demand in here, right? Got a fresh zone, you got a tested level, you got these big areas down here, etc. Right? That's another example of using supply or demand levels, right? Well, then you've got order blocks. Order blocks, you come in here, they're completely different locations, but they're doing the exact same thing. So when you look at a trap, when you look at an order block, or when you look at a supply or demand zone, they're all doing the same thing. What is that? Can anybody get it? Let me see if you guys are paying attention. What are they all designed to do? Let me see if anybody's getting it. What is the similarity between a supply or demand zone, an order block, a trap, anything? What is the purpose? Locate support and resistance so that we can find a location to buy or sell. Absolutely. Okay. So then what I'm going to do is I'm going to turn this off for a second. We're going to. So knowing this, wouldn't it be safe to say that all of this is to tell us where to enter? It's the location. It's the entry location, right? So let's sum this up. Supply and demand. Order blocks. Traps. All of this is designed to show us entry locations. But wait a second. Isn't that what every other software in the world is designed to do? The winning entry, right? Like, give me the best trade setups. I've got the best system. Trust me, right? The whole objective is to find an edge. So what I want to do is I don't want to lead with that type of an educational event today. I don't want to lead with, hey, this is great software and trust it. It is great software, but I want to show you some serious merit using a combination of top-down analysis, multi-time frames, and then locations using the software to get in for really big trades. Okay. So what I'm going to do is I'm going to use multi-time frame. Okay. We're going to do some top-down analysis. We're going to locate the uni zones for entry and plan huge R multiple trades. Okay. So how many of you guys would like to have an actionable strategy for this? Like if I give you the exact rules and all you need to do is just repeat it, like literally just repeat it. Okay, because I'm just going to map out the exact rules. And then what you're going to do is you're going to go and back test. And I can assure you that you're going to see some merit here. Okay. How many of you guys trade crude oil? Can anybody here tell me if you trade crude oil? Anybody here trade crude, the S&P, the NASDAQ? I'm going to show some examples on these markets today are going to blow you away. Okay. Blow you away. Okay. Especially today we're on crude. Okay. So what I'm going to do is we're going to just kind of do things here. I'm going to map this out. Okay. So this is like the simplest thing, but yet it can be the most powerful concept. This is a 4-step trading plan. Okay. And what I'm doing is I've got 2 workspaces. I'm going to show you 2 workspaces here. I've got this workspace here, and I've also got this workspace. This workspace is ultimately, I could look at every single market under the sun, and I can do a top-down approach all the way down to the 5-minute, the 10-minute, the 15-minute, the 30-minute, et cetera. Okay. But we're going to go to that in a second. I want to just focus on some futures first, and then we can go and take a look at other markets, and we can, you can give me any market that you want, and I'll show you the exact process to find the trade and show you exactly why it works. Okay. But give me, which market do you want to look at first? I've got 3. I've got crude oil, the NASDAQ, and I've got the S&P. Okay. Oil. Okay. Eric wants to look at crude oil. Okay. So now, are you guys okay with me teaching you something that's kind of unorthodox, like what most people aren't doing? Because normally if you learn something that a lot of people don't understand or know, you might have a significant edge that a lot of people aren't paying attention to. Okay. So what I want to do is I want to explain something. Most futures traders stay in their little bubble. Most futures traders are thinking that scalping is the only way, and that the only way to make a big opportunity happen is that they need to scalp on small time frames. Okay. They're not wrong. But just because one person does something some way doesn't mean that there isn't a better way to do something or an alternative way, right? So what I'm going to do is I'm going to take you down a path of big bank level trading. This is going to be, okay, this is going to be normally how, some bigger traders are approaching the market. And so why would I want to teach you that? Well, first of all, because they're the ones that are making the impact. B, they're the ones that are, planning levels with a little bit more intelligence than the retail public, meaning that they've got a little bit of an insight that most retail traders don't understand. And then B and C, like, if you can just put yourself into really a couple of huge trades a week, you could be doing something way different than most people are doing. Okay. So I'm going to start on the 4-hour chart, and you're like, what? Like, this is futures, right? Like, okay, but I'm going to do it on a volume. No, Henny, just stick with me here. Stick with me here. Don't ask questions on stuff that let me get through this, and we're going to go through this, because this is where most people lose sight of the process. Be teachable. Okay. We're starting on the 4-hour time frame. Okay. And then what's going to happen is I'm going to explain. I'm not using time charts for this example. I've converted the S&P, the NASDAQ, and crude oil to volume charts. Now, there's a reason for that, because volume is an advantage. There's an edge here. Okay, there's an edge in volume timeframes. How many of you guys are familiar with volume charts? Anybody here use them before? Anybody know what they are? Anybody in here that is interested in using volume charts for what I'm showing you, okay? If you're using the Unizone software and you're using what I'm about to show you, you can send an email in, and we will give you a converter that will convert the time frame so that you understand what we're doing. Okay. And then what we're going to do is that way you can put some significant enhancements into what you're doing for this. Okay. So what I'm going to do is I'm going to just start with crude oil for a second. Okay. We're just going to go with this. Everybody can see this. Now, this is a 4-hour volume chart. Okay. So we're looking at a 24,000 volume chart for crude oil. It's about the same as a 4-hour time frame. Okay. The first thing that we're going to do is I'm going to teach you how to map the structure on the 4-hour chart. Now, some people are going to wait for 2 consecutive higher highs or higher lows with a body close. So when I say this, this is a rules-based approach. Don't sit there and give me your spin on it. Don't sit there and try to tell me that you've got this other way of doing it. I'm telling you, this is months and months of analysis that is put into this to be able to make this very efficient. Don't break something that's not broken, learn it. Okay. So what I'm going to do is I'm going to teach you what we do when we call it structure mapping. Okay. Structure mapping is this. If I've got a downtrend, okay, and then I get a change of structure, I need to see a candle close. Does everybody understand that? So I'll give you an example. We had a lower low, we had a lower low, lower low, lower low, low. You see how we wicked here? You see how we came, but we never closed above on this chart? That's not a candle close. So you need a candle close for us to be thinking the opposing side. Got a candle close, came down. You see how we got a candle close right here? We never got a candle close down here, but we got a candle close right here. So right there, that would be considered a change for us to be thinking from the opposing side. Now, there's 2 things. A really patient trader will wait for 2 changes like this. So I'll give you an example. If you're coming down, a more aggressive trader will start trading along after we've had the first change of structure. A more conservative trader will wait for the pullback and then wait for the second change. I'm here to tell you in futures, I will be more aggressive because futures is not Forex, so you can trade a little differently. I'm going to be a little bit more aggressive with this example. So what I'm going to do is for structure mapping, I'm going to look for higher highs or higher lows with a body close, 1 transition. So I'm going to look for 1 higher high, higher low, or lower high, lower low. Does everybody understand that? Candle close. So if I was to look for shorts, I need them to close below the lows in here, right? Like this is the last low. I need them to close down here. Does everybody understand that? If I was to get a close, I would start looking for shorts. Does everybody understand that? Give me a yes, that makes sense to them. The whole point of the 4-hour is telling you, are you a buyer or a seller? So let me give you an example. The first thing that we do as soon as we get that candle close, I'm going to change this for a second. You're going to see the magic here, so just trust me when I say this. There's the line in the sand. Got the first candle close right above that level, okay? As soon as that candle closes, that is your playing field. This is your playing field. Like most traders don't understand what that means yet. We're going to turn off the zones because the zones are not necessary on this chart. We don't need any zones on the 4-hour. We're not using the 4-hour for any location for entry. Now what I'm going to do is I'm going to take a grid. I'm going to take a Fibonacci. I've modified the Fibonacci to take the high to the low of that range. Okay. I only want to be looking for buys down in this location. Does everybody understand in there? Because that's value. It's prices are cheap down in here. Does everybody understand this? So let me explain something. Most people think you're trading the candles. You're not. You're trading price. Most people don't know how to understand price because they spend all day looking at the candles. But what I'm trying to do is I'm trying to teach you that once you know that the candles told the story, prices confirmed a bullish sentiment, we need to know where to be a good buyer down in here. That's the whole point. So what I do is I start on the 4-hour chart, okay? This is the first rule of this trading plan. This is a trade plan for you guys. You know, you can take it and use it or not. It's your call. The next thing I'm going to do is I'm going to go down to the 60-minute chart, 60-minute volume, 4-hour volume. And this is the 60-minute volume. Okay, I have them set. You can watch this recording, get the fractals for these markets, and we can give you the document. Okay, I'm going down into the 60-minute chart. Okay, so I'm going to go into the 60-minute chart. Okay, I'm going to turn off all the zones because I'm not looking at zones on the 60-minute. I'm not trading the 60-minute. I'm not trading the 60. I'm not trading the 2-hour or 4-hour. I'm using this for information first. Okay, I'm using this for information. And this is what a lot of really, really big level traders do is they do their analysis, they plan their areas, they wait because their banks If they work for a bank or they work for a big hedge fund or a prop firm or something, they don't sit there and just scalp. Like they have mandates. And those mandates mean that they have a job to do. They need to fill a certain amount of orders at a certain price, or they need to be able to get at a certain area because that's what they're supposed to be doing. So what I'm trying to do is teach you how they think. And this is how we use the uni zones to identify it. Okay. So what I do is I take this 4-hour level, because that's a 4-hour level, and I refine it. I look for the change of structure on the 60-minute, which is here. So it's not a big change here, but it's something that I'll normally do is I'll go down to the 60-minute. And I make sure that I refine that area. Okay. Then what I do is I go right down into the 15 or the 10-minute chart. So let's go to this. I identify the break of structure on the 60-minute, and I make sure that any location that any zone that I'm getting ready to trade is either above or below that 60-minute break of structure in value based on my bias. So let me explain what I'm doing. I will go in here now. I'm going to turn off all the zones for a second. Okay. And what I'm going to do is I'm going to just look, I'm going to look inside of this location. Like this is all about the area for me. It's all about the area for me. And if I know that this is a 4-hour level that's been refined down to a 60-minute level, and now I'm going into, this is the equivalent to a 10-minute chart. You could use a 15. I've got a 10-minute for the purpose of our trading rooms to run the 10-minute volume charts. And this is where I use the software. So this is where the software is designed for. Like this is what I'm using the unizones for. I'm locating key areas of buying activity, whether that's a supplier demand zone, whether that's an order block, or whether that's a trap or an imbalance. Does everybody now see the point? Like I know that I'm supposed to only look here. Okay. I need to look in this location because A, it's below 50%. I've confirmed buyers on the 4-hour and the 60-minute level on that structure break. And what I want to do is I want to look for cheap prices over here to locate where the banks are going to add back into their positions if they're going to hold the market. Okay. So let me just draw a little something. Do you see the thrust candles down here? Like, do you see there's two things you want to pay attention to? I don't normally trade with the zones on. So this is what, as a designer of the tool and as somebody who has a lot of experience looking at charts, I don't need the zones on the chart. Okay. I don't use the zones at first because I'm more interested in looking at a clean chart to see where is the demand. The demand is in this location here and in here. You can see the candle thrusts. Now you'll notice that this is a demand zone because I've got white candles with a thrust. This is an order block. These are two separate types of trades. So I could turn them off or on. I could turn whichever ones I want on or off. I could turn the zones on. There it is. So I only have a demand zone in here like this. If I just did this, and I'll just draw the zone manually so you can see it. Our software will do that for you, by the way. You can see here, you can see there it was, right? There was a demand zone there, okay? And then there's another zone down here. I could do an order block. You can see there's another order block down here, which I can draw like this, okay? Now I could go and I can turn tested levels on, and there's the tested zone, and there's the, you can see our software has located both of those zones. I'm just doing them manually for the purpose of this demonstration, okay? Now, why am I sharing this with you? Well, because the purpose of the software is to tell you where to get in. But isn't there a whole shitload of other zones up here and over here? And like, isn't that the problem? Like most traders don't know how to drive the Porsche. And as a day trader, most people are getting crushed, taking the wrong locations, fading reversals. They're on the wrong side of the trend sometimes. What if I told you that every morning, all you need to do is do a top-down approach, start at the 4-hour, refine to the 60, go down to the 10-minute, and then locate the best, really, really low risk trades? Well, I'm going to draw a risk reward environment to this. And I'm going to go and I'm going to show you how I would look at locating this area. So I'm going to go in here, wait for it right there. Okay. So let's just stop right here for a second. Okay. I know that this is a very good place to be buying crude oil because I've done my analysis from the 4 hour down to the 60, down to the 10. Okay. And so the question becomes is how do I enter the trade? Well, in Forex, a lot of Forex traders will use confirmation entries. Confirmation entries will be, they'll come in, they'll wait for a change of character, then they'll get their retest, and then they'll go. Well, I'm here to tell you that futures trading is not so luxurious. Futures trading is more competitive. Futures trading is more professionally based because futures traders mainly an institutional market that is very, very competitive, and you don't get as much time in futures. And this has been my experience. You don't get as much, you don't get the opportunity that Forex traders get a lot of times waiting for those change of characters, waiting for those rotations, that extra leg. So what I normally will tell traders is that if your risk and reward analysis is in queue properly, your stops and entries should be in the right location. So what I will do is I will basically place an entry in this zone and I will plan, okay, I will plan my farthest target to be at this high rotation. So let me give you an example. The objective of today is huge R multiple trades. Okay, so we're going to enter aggressively or conservatively on the zone chart. Okay, and I'm going to look for, 1 to 4 R multiples minimum. You could do 1 to 3 if you want, but I'm going to plan 1 to 4. Why? Because when you're trading bank levels, you're going to get those trades. You're not sitting there scalping for peanuts. You will, if you are on the right side of the 4 hour and the 60-minute, and you narrow down to a 10-minute location for a zone entry, I can assure you this, that you are going to get some huge trades. How many of you guys would like to see this? I'm going to plan an R multiple out like this. I'm going to map out where my target would be. Okay. And I'm going to show you where the furthest target I will be at. Okay. The furthest target I would be at I would put my resistance at the high that rotated the rotation. So this would be the last high. That would be the high that changed the structure and caused the rotation. So that will be my target. Does everybody see this right here? This, and we're going to do another market. We're going to do the S&P, and we can do whatever you want. I want to teach the strategy first, and then we're going to do quickly. I'll do it top-down analysis, bing, bang, boom. Okay. So let's take a look at this. So there was the crude oil trade that happened last night off the Globex Open. Okay. And then what we're going to do is there's another trade here below it, isn't there? There's another trade down below. Do you see this zone? We never touched this. Okay. So that was trade number 1 following the 4 hour top down approach. And then down here, let's take a look at this. There it is. There's the second trade. We're going to just do the risk and reward analysis. For me, the risk and reward on this will be at the last rotation of this high. My furthest target will be at that swing high. So it's a 4 to 1 R multiple right there. There it is. Now, why are these trades so freaking massive? That's the question. Why are these trades so big? I'll tell you why. Because you're using the 4 hour for driving the direction. You're using the 60-minute for the break of structure. These are bank trade timeframes. These are not retail trading timeframes. So this is a concept that is used. It's considered smart money concepts using supply and demand and order blocks. Our zoning software is going to tell you the zones, but you need to also understand the process. Did you guys learn something from that? Can you guys give me a yes? That was today's trade on crude this morning. That was off the pit open. You guys with me? Give me a yes. Give me a yes. You guys with me? You guys got Johnny on it? Okay. Do you want to see the huge trade on the S&P last week? Do you want to see the big one that happened? The NASDAQ's happening right now, actually, but we'll get into the S&P and we'll get into the NASDAQ in a second. Let's take a look at we're going to go quickly now. Okay. Are you guys okay with me going quicker? Now that you guys understand that? Well, Eric, that's the best part. The whole point is understanding the 4 hour time frame first. That's going to give you the idea not to trade around with all the other zones. And we're going to take a look. Great question. So I'm going to just kind of go back because the whole point of the 4 hour is that it makes it super easy for you to know which side of the market you're trading on. Okay. If I can just take a look at this chart, can anybody tell me, should I be a buyer or should I be a seller? That's the first question you need to understand. Should I be buying right now or should I be selling? If anybody was paying attention to what I was paying attention to. I know it's new. It's a new con. You're a buyer, Eric. Yes. I'm going to explain why. Because we had a close above the swing. Okay. We had a close above the swing high right there. Okay. Now, before I talk about the trade that's in play right now, yes, building on the 4 hour and trade on the 10. Absolutely handy. Yes, absolutely. But there's a little bit of a refinement down to the 60 and the 30-minute. We're going to talk about that. Okay. I want to go into last week's Friday's trade for a second. I want to show you Friday's trade. Okay. So let's just go down here. We're going to do this. You see this close right here? See how we close below the structure? Right there, we closed. So at that time, what I'm going to do is I'm going to go in and we're going to map out the fib grid, expensive to cheap into retail. Okay, right there. So we're going to go down into the 60-minute. So there's the grid. Okay. As soon as we close down, I'm going to look for the break of structure that happened that led to that break right there. Okay. You could say it was here, but there was one right there too. So I would say this is probably the better break of structure because it's just a little easier to see. Okay. We're going to go down to the 30-minute. You'll see the 30-minute also had the break of structure in retail. So I'm looking for this right here, break of structure area in retail. Okay, so this is how I nail down the top down on the information chart. Then I go into my 10-minute. Okay, I'm going to go in here. Can anybody see the order block? It's a double zone, which is really interesting. It's a double zone. But what I'm going to do is I'm going to explain there was an order block here. You can see that this was a demand zone, right? You can see that the green thrust candle, which would have plotted the demand zone like this, right? But then as soon as that demand zone flipped, we got a breaker block right here. It's a demand zone that turned into a supply zone that ended up becoming broken supply. Demand becomes new resistance. Who here was paying attention? What kind of a zone is this? Is this a regular zone or a breaker zone? It's a breaker block. So this is a regular zone and this is a breaker block. So this is on the 10-minute chart. I'm going to go in here. We're going to just do a little zone exercise and draw for you. That was the breaker block. And this is the order block. Either way, you can just fine tune it down a little bit if you wanted to. You could go into the 5-minute and just take a look and just see here. You can see, yeah, the 5-minute was a little bit, I'd say on the 10, I like the 10 myself. It's just, for me, it's better. I don't like the 5-minute. 5 minutes more for confirmation. I'm more of I like to trade on the time frames the banks are looking at. 15, 10 is the minimum they go down to. So if you take a look at this, okay, like right here, that's the zone. Does everybody see it? That's the zone right here. So if I go and I turn on broken zones, you can see that was the supply level that happened. Does everybody see that? Let's turn off. You can see it. Does everybody see that zone there for a second? So let's just watch when price came up. That was the level that happened at 10 o'clock in the morning on Friday. So let's plan this trade. This is the trade based off the 4 hour. Drop down. My furthest target is going to be, okay, my furthest target is going to be at the swing low. They gave me a 3-to-1 on that before they ripped back up. Yeah, 3-to-1. So that was a huge short that came out of the breaker block following the top-down approach that we use on the 4 hour, down to the 60, checking the 30, down to the 10. Like, it's all about the top-down process. It's not about which zone to buy or sell. It's all about knowing the zone based off the top-down process. Everybody make sense on that? Can you guys give me a yes, that makes sense? Or did I lose everybody? I just want to know if everybody's on the same page with me. We'll go back to the 4 hour, we'll do another trade. Turning off all the zones for a second. let's take a look here at the current time frame. Let's go to the 4 hour. So now I want to talk about a trade that's in play right now. Like, let's just talk about real trading, like not like back testing, etc. Let's go talk about real trading. So the first thing I'm going to do is I'm going to map out the swing high that closed above structure right there. Then I'm going to go and I'm going to map out my fib grid from the high to the low. I'm only going to look for buys, okay, down below value. But before I do this, I want to narrow down the break of structure on the 60-minute. I want to make sure that I'm finding zones below 50 that happen below the break of structure on the 30 and the 60-minute chart. So what I normally do is I like to take this and I bring it down. I say, okay, is the break of structure below the 50? Yes, it is. Let's go down to the 30-minute. You can see, is the break of structure, this last break of structure that happened here, below the 50? Yes, it is. So then I leave that line there because I know that I'm trading in value when the order blocks down here had enough power to break the structure. That's what the whole point of what I'm doing. Okay. Now, some traders will say, well, I don't want to do that. Well, there's a reason why you look at structure breaks. You want to look at zones that create changes of structure. You don't want to just see a big push up. You actually want to see structure being taken out from those levels. And what I'm going to do is I'm going to go into the smaller time frame now and take a look at the S&P. So let's go down here for a second. Let's go down and let's start right here. So isn't the whole entire focus is from this level here to this level, this is considered cheap. We know that everything below that yellow line is going from the 4 hour down to the 60, down to the 30, which means that everything that's cheap led to a huge break of structure. So what I want to do is I want to identify supplier demand zones, in this situation, demand, order blocks that are down in this area that makes sense for me to be a buyer. Because it makes sense for me to be a buyer in cheap prices on the right side of the higher time frame, below value, based off of structure changes. Like, there's a reason for the process. So what I'll do is I will go in, I will turn the zones on. And what you can see in here, and I'm going to look for the green thrust candles. I'm going to look for the green thrust candles, and you can see them. You can see there's the green thrust candle here, and there's the green thrust candles here. Everything else is diddling in the middle, and I want nothing to do with it. Okay, so let's take a look at it. Right here. There's a level. Okay. There's a level here. Okay, and a level down here. And ultimately, what you can also do, you can also identify is broken supply that turned new demand. So if you take a look at this, like, this is broken supply that became new demand. But there's no need for me to draw a level in here because take a look, they came back down and they plotted demand there anyways. So to me, it's already there. Does everybody understand what I've done? So if I go in here and I turn this on, so there's some tested levels, some broken zones. You can see the software will do it for you. I'm trying to teach you the process, and then you can let the software do the hard work for you. So let's continue down. Let's wait for the market to come back down and test. Okay, so I'm going to, boom, right there. Okay, so I'm going to just leave it at this for a second. This is the first location that buyers are evidently available to be ripe for the picking. Okay. Now, remember, what is my R multiple on these trades? Like, I'm aiming for 4 to 1. Yeah. 3 to 1 to 4 to 1. Does everybody remember that? I'm aiming for 4 to 1. So what do I need as a win rate to be very successful on trading this type of a strategy? If I'm getting 3 or 4 to 1 R multiples on my bank trades, what does my win rate need to be massively successful? Not very high. Now, I like a high win rate, but I'm here to tell you that it's not necessary when you're trading big bank levels like this, because you're going to get the big trades. So let me just kind of map this out. And I'm going to draw the risk reward tool for a second. So my first objective will be to identify the rotation that broke structure. So there's the rotation. Okay, this was the structure break. This is the resistance that led to that rotation. That will be my last target, not the high, the rotation that was before it. So I will go down. There is my 4-to-1 target right here. Does everybody see this? So what I'm going to do is I'm going to look to see how well this trade hit. Okay, did it hit? Got my first 1-to-1 target here. Now, how you choose to manage, I don't know your preference. It definitely got a 1-to-1 out of that area. Okay, and it didn't give us the full rotation. So let's continue back down. We're still there. We're still there. Never even hit the stop yet. Could this be where they're building the position to lift? Sure. There's also a chance that it could come back down and take this lower levels of order block. Either way, this hit targets already, or some targets. You could be peeling out. Does everybody understand that? Like, or you could just trade for a 1-to-1 and you don't need to go for those big R multiples. But I'm here to tell you that these trades will produce huge R multiples because it's bank level trading. Like, these are bank areas of interest. This order block led to a change of structure on the 4-hour. This order block led to a structure change on the 4-hour. So when they come back down to test that on the right side of the 4-hour structure, you're going to get some big ass trades. So this is a really good trading opportunity. I would argue the fact that we're going to get a big reaction when we get back down in there. Yeah. Does everybody understand that? Give me a yes that you learned something from that. Right? Our software is going to identify where those zones are. I'm also here to bring you 10 years of experience on how to follow top-down analysis to know where to trade these levels. Okay. Like, this is, if I go and turn on the zones, I'm looking for support, not resistance. So support only. Okay. Turn on tested. So we've got demand coming in there. And, you know, a lot of traders, like you can see this is where the software was right here. Like, this is where the zone was. And then we got the break of character. There was another change of character here that came out, boom. But, you know, it really just depends on what your objectives are. If you're a 1-to-1 R multiple trader, you're out already. That trade's done. The reason I like setting a big R multiple target is because it gives me the ability to have an appropriate size stop loss for my thesis. A lot of traders are trying to trade with such tight stops, and I get all that. But this is not a scalping tool. This is a bank trade setup. This is a big bank level trade. Does the volume and block size help in confirming the buy and sell? The reason I like using volume charts for futures is because it's just an added advantage. You can't use volume charts for Forex because the volume is so high you can't even convert it. But for Forex, I use time charts, right? And I can show you this exact same strategy on Forex. I can show it on any market, Bitcoin. It doesn't matter because it's a price action strategy and it's using order blocks and supplier demand levels. But you can see they're building a position. They ran stops here. So what they did was they came in, all right, they're building a position. They came back down, but you can see that's the second change of character. I would argue the fact that they're starting to leg up here. They flushed. This is what we call the liquidity grab. They ran the stops into the liquidity, and now they're building another big position. Like, they're adding size here. So I would argue the fact that because the 4-hour is on the right side of the market, they drove it down and now they're building that position to try to take it back up. That's what's happening. The only difference is that you're not sitting through all of this and doing anything in this. Like, you're literally sniping these levels. You could set an alert and just map this out and just set an alert if the level got within, like, here, right? Did you ever hear me talk about the daily or the weekly, honey? Did I ever mention the daily or the weekly in here? I love everybody. They always want to go into these details, but like, there's a reason. Unless you want to do bigger swing trades, there's no need. This is a day trading setup, right? This can be done on global assets. Okay. Yeah, I could go, well, I need to convert the volume, Gilbert, on natural gas, but I could look at it on on time charts right now. So let's go in and take a look at it on a time chart. Like these are just volume charts. Okay. But you can see the objective that I'm trying to do. Like if I look at the NASDAQ, I'll just quickly do the NASDAQ real quick. You can learn from it. So there's the NASDAQ. Big boy NQ. Break a structure to the high. Curve map, the pullback down to value. Go down to this 30-minute, looking for the break of structure that happened over here. That was the last break of structure that led to the value change. So you can see there was the break of structure. The information in this leg is what I'm concerned about. I'm concerned about the information down in here. What was going on in these price levels that led to the break of structure on the 30, the 60, and the 4-hour that drove this market up? There had to have been some sentiment down in here that made sense. So let's go down now. I've mapped it out. Now I can go down into my smaller time frame, look for areas to fine tune my risk. Okay. And let's go into it. Let's kind of just take a look at it and let's just kind of narrow it down. So if I'm going down into this, I've got order blocks, I've got supplier demand. The only thing I don't understand, I think this is just a setting that I have. This is supposed to be a zone. You see how this candle came down here? You got 2 basing candles and then this. The only reason it's not highlighting fluorescent is a setting in the software right now, but I will draw a zone here because it is supposed to be a zone. And it is a zone that if I go in and adjust the settings in the software, which you can read in the user manual, it'll ultimately, that's a zone right here. So there's a zone right here. Okay. There's also a zone right here. You can see the thrust candle. So the zone on top of a zone like that. I'm drawing them manually so you can see I don't need the software. Okay. And then what I'll do is you need the software, but you need to be able to understand why I'm drawing them there first. You need to also see that the prior levels were here, right? There was a thrust candle. Okay. And this is a zone in here. So like I would look at these areas as price comes down into these zones. Okay. Let's watch it. Okay, take a look at this. Like this is just take a look at this first reaction on the NASDAQ today. That's the zone right there. So let's just draw this. Now I'm not trying to nail it to the tick. I'm not trying to be that guy. I don't care if I get the perfect fill. But what I am more concerned about is the demand levels down in here and down in here and down in here that led to this big break of structure. That's the most important part to me. Okay. And so when I look at where my target will be, my first target will be the rotation that led to the break of structure, which will be these highs up here. And that'll be my 4-hour multiple target. So if I draw this like this, I will set an hour multiple like this, and that'll be, there it is. So the first objective, the T1 was already hit. Now, I would argue that if you're looking to swing for big trades, you could go to break even after T1 like that. That's a 1-to-1 hour multiple to go to break even. And then it came back down and this is the area here, and it didn't lift here. So depending on how you got out of this trade, like it did hit a target, but that doesn't necessarily mean it's going to be the one that gives you the 4 full hour multiple. I would argue that the next zone down here is the next trade location, right? And I still will be aiming for the same rotation up here. Okay, so now you can see like this came down into the next order blocks that the software has identified, and you'll see how it came in very clean and it's rotating out of there because they're building a position. They're building a position in the right location. So, you get a T1 here and break even. Now here we're just at T1 here, and they're lifting, and this is the same thing with the S&P right now. It's the same trade, right? Did you guys see it? You guys see what's going on here with this? The Unizone software is going to identify the order blocks and the supplier demand and where to enter the trades. I just wanted to come in here and give you guys a top-down analysis so that you guys can copy this and use this to your advantage to locate the best trades. Like, could we scalp? Yeah, if you want to scalp these and you want to scalp them differently, then we've got a prop program that uses this with a different strategy completely. This is just a completely different strategy, but it's a very effective strategy. Okay, it's a very effective strategy. So let me kind of do another example. Let's just do this. What is the rule on entry, since sometimes it goes further into the zone? You just enter, Curtis, just enter. Like, there's no rule on entry. You put your buy limit on the entry zone. You put the whole objective for me, and I'll explain here. If I'm looking for buys, I'm turning the software only to support only. If I'm looking for buys, I don't want to see any sells in here. The whole rule for me for entry, okay, let me just make this a little simpler so you can see it. Okay, the whole rule for me for entry would be, I will take the trade on the first touch, because the way that I'm managing my R multiples, I'm aiming for a target up here. So I will move my stop to break even at T1. If it rips, if it doesn't, I still collected a base hit, right? Like, that's the whole point, is you're still getting on base, because the next zone was down here and my target is still up here. And I'm still going to collect another base hit, because nobody ever knows if the market's going to be lifting from this level. Nobody knows. It's called probability analysis. But there's a very good probability that, because we're on the right side of the 4 hour, the 60 and the 30 from this rotation, that these demand zones are where the buyers are driving price. So if the market's going to stay on the right side of this trend, then eventually the buyer has got to come in. And where are they going to do that? They're going to come in these order blocks. They're going to come in these order blocks that are coming down in here that led to the break of structure on the 4 hour. Because the 4 hour time frame is a bank level time frame. They need time to move money. Right? So when you look at this, the first objective would be, let me just draw a risk reward tool. The trade plan is still the same. The thesis is still the same. Right? Like, my stop would be here, and then it got a T1, and then that zone, didn't give us, I mean, one would say, did that trade work? Well, yes, it did. It just, the market didn't give us the follow through to the entire objective. That doesn't mean that the trade was wrong. It just means that the market didn't give us the full 4 hour multiples out of that location. Could it give it out of here? You could. Absolutely, it could. It could definitely give you it right here. Right? Like, the same trade objective is still here. It's just you're getting in a different place in value. Right? It's kind of like when you look at what happened with crude oil. Crude oil came down into the overnight, hit that location. They drove it up, and then what they do? They drove it back down only to drive it back up again. It's the same target. It's just one trade got you here and it gave you 3 Rs. One trade here got you 4 Rs. That's 7 Rs. Like, that's 7 R multiples on your trades in 2 trades on crude oil. Right? Now you say, well, I wasn't at my desk at that time. Well, then set an alert, because if you do your analysis like this, you only need to be setting up your charts like probably once a day. And then what you do is you just set an alert level and you just wait, because you're trading the 4 hour time frame. Like, most people don't see it. Like, you're trading the 4 hour, you're entering on the 10 minute. The 4 hour is your decision making chart. And that's the difference between being a big boy trader and being a fish in the bottom of a fishbowl with no water, floundering around, drying, dying. And I could go and I can show you some other setups. Like, take a look at this. Give me a market, pick a market. I got a list of them. This is how you can tell what I'm about to show you is going to blow you away. And this is a time-based chart. Anybody here want to give me a market out of here? I'll just tell you the next trade. We'll just go and we'll find a couple of wicked trades. You guys get the Russell. Let's go take a look at the RTY. Let's take a look at it. So this is where it's a rules-based approach. Okay, take a look at this. So can you guys tell me which side of the market I should be trading? It's the 4 hour. Should I be buying or selling? Good. So I'm going to go in here. We're just going to map out the line. Break of structure came in here. This was the clear break of structure here on the 4 hour. I'm going to map out value in retail so that everybody understands where I'm buying. buying in 50 below. I'm going to go down to the 30 because I like to look for breaks of structures below. And you can see that there was a break of structure down here that led to this. This is a break of structure here that led to that transition. So I would actually want to look for order blocks that are below this yellow line. So let's go into the 10-minute. Wicked. There they are. So these will be the trades that I would look to put alerts with. And I'll just turn on support only. And let's go in here, put on some fresh levels. There they are. Now let's take a look. Do I got fresh zones here? Fresh. That's a supply and demand and order blocks. So like you've got 3 trades in here. You got 3 trades. Trade number 1, trade number 2, trade number 3. Could we take a while to get there? Sure. But that's the whole point of having an entire freaking watch list to trade. Because when you're trading one setup like this and you trade it across every market, I've just nailed down the opportunity to be waiting. I can assure you, if the Russell's going to buy up, they're going to drive it down to cheap prices. Institutional traders don't buy here and push it higher. They're going to drive it down. They're going to buy. And I can bet you maybe that'll happen sometime this week. I bet you the Russell should pump down in here eventually, someday, maybe. I don't know. All I know is that if it doesn't and it changes structure and we come back up here and we do a pullback like this and we get a structure like that, guess what? I'm mapping out a new area. I'm going to look for buys in here. Price comes back down and pumps up. Does everybody understand the process? Give me another market. These are the trade setups here. 1, 2, 3. Euro dollar. I was looking at the euro yesterday, Curtis, and my thoughts on the euro are we should give it some breathing room until it clears a direction on the 240. I'm going to show you what I mean by that. Give it 1 second. Take a look at the 240. So right now, when you say retailer, what does that represent? Yeah, so you want to be a buyer in value and a seller in retail. You don't want to be buying things expensive. You'll be bag holder. So a couple things I want to mention here. The euro's in a very tight range. Okay, it's been there for a while. Okay, so for me personally, I would want to be very specific with the location, and I personally wouldn't trade the euro unless I broke outside that range. I know that doesn't make sense to a lot of Forex traders. Most traders want to trade the euro, but I'm not. Give me 1 second, guys. I'm going to take some water here. I'll give you an example. They're really messing with a lot of traders in here right now because it's a messy environment. It's a very messy environment. So there's no direction on the euro. So what we want to do is we want direction. So rather than wait for 1 candle close, I want 2. So, you know, for me, you'll see I had a candle close here. I would want to pull back and then I would wait for another candle close and then I would look to engage. Because, you know, you can see they're riding both sides of it. They're riding both sides of this range. And for me personally, it's a messy market. So you'll see we didn't have a candle close below the low. So we can't short up in here. We can't look to short. We had a candle close above the highs, but what they do, they bring it right back down into liquidity grabs to lift up. So to me, these little like 1 bar flips like this, not really identified. I would look for this structure change. So if I was to look at, you know, looking at the euro on this, if I was just trying to be more aggressive, there it is. So I would actually look down to the 30-minute. I'm going to look for a break of structure down here. The last major break of structure happened here. You can see these test, boom, break of structure, retest, lift. So what I'd be doing is I'd be looking for order blocks down below that area. Down in this area here. This would be where I'd be looking to engage in the order blocks down here. And I'm going to put some zones on the chart. I'm going to draw some manual zones from the thrust bars because you'll see there was a thrust candle here. Okay, there's a thrust candle there that was pretty solid. This one here. Okay, and let me see if I have zones. Yeah. So you can see there's the level that they came down to. Now here, let me explain this for a second. Why is this so powerful? Why is this area so powerful? Because a lot of traders are trying to get the perfect entry. Do you really think a bank who's moving a whole whackload of money around due to a fundamental GDP report or some other type of fundamental announcement with wholesale inventories, or some type of interest rates, or some type of non-farm payroll, do you really think they're trying to nail down like a couple pips in their entry? What do you think that is? Like, do you really think that that's their objective? No, because their objective is, if they're going to be a buyer into this area, they're trying to get out up here. They're not worrying about a couple pips. They're trying to move the market. So when I'm looking at a bank level trade like this, what I'd be doing is I'd be looking at getting in on a first touch, and I'd look at targeting, I'd look at targeting up here, right? I would look at targeting up here. And if I got stopped out on the first one, I would re-engage on the second one, right? And I would put my target. The first objective needs to be the target at the highs here. So I would look at this one here. That you would have got kicked out and re-entered on the second zone, right? So you could have had the second zone entry. There was two zones there, right? And that's the difference. So that you can see the difference between, just letting it come in. And sometimes you'll get a kick out. I mean, you can't be perfect. Everybody's going to get a stop once in a while, right? But where did it come in and test? Like if you look at the first test here, okay, like the first test came in and then they came in and they retest. Now the difference with Forex charts, and I'll explain this. Remember we talked about Forex charts, they do things a little different. Futures trades, you don't get the confirmation all the time. Forex does. Why? Because futures has volume, Forex doesn't. So all of the traders in Forex rely on price structure, whereas futures traders rely on volume analysis. So the difference between trading Forex, and I would strongly encourage Forex traders to do this, is that when you get down to a level, you don't necessarily get in on a first touch. You could get in on what we call a change of character entry. Now, let me explain what a change of character entry is. This is the original zone. Price breaks the change of character here. You see this? It comes in, breaks it. We form a new level of demand here. You enter on the retest. In futures, you don't get that luxury. It doesn't work that way in futures, 9 times out of 10. And you'll notice that if you were to engage in that type of an entry, and that's called a change of character confirmation entry. So if you look at the zone in here that created on the retest, after they blew through the area on a change of character, that's where you got the opportunity for the really big trade. They came into the location right, but the difference between trading the S&P, crude oil, and everything, crude oil will leave you behind. Like there's no time. Like crude's coming down, they're flipping the switch and ripping it. The S&P, they don't have time to wait for change of characters. They're heavily volume traded, and they don't operate the same as Forex. Forex, everything is about price structure, everything. So that's why a change of character entry like this is always going to be more beneficial, because take a look at the R multiple you would have got waiting for a confirmation entry on the retest of that. You'd still be sitting, you'd have already almost objectively hit 3 R multiples up here. It came 2.5. Make sense? Now these are bigger trades. Forex is different. Forex is different. You can trade for a prop firm and hold overnight on Forex. You could work for a prop firm and trade Forex, and you can hold for days into the close. The futures is different. Futures is different. Does everybody understand the process? The whole concept. Well, for Forex, it's different. You can hold into the close depending on Forex. You can't do that for futures unless you're trading your own account. Then you got to have the overnight margins in check. Anybody else have a different market before we wrap this up? Jim, you there, brother?
I'm here, just taking it all in.
It's a lot to take in. But you'll see that it doesn't matter if I'm looking at 240 minutes or if I'm looking at a volume chart. If I'm looking at a volume chart, it don't matter, because if I'm looking at any type of chart, I'm using the top-down approach. to be able to simplify the reason for us getting in, right? And that's the whole point of, if I'm looking at a time chart or a volume chart, the process is still the same. The only reason I like volume charts is I get really clean zones for futures. Very clean zones for futures. Okay. Now the Unizone software is designed to tell you where the order blocks and supply and demand zones are. I just wanted to give you this arsenal so that you can take smart, this is a concept of smart money, but bring it down into multi-time frame and ultimately bring it down into futures as well. Because normally these types of trade setups are traded only in Forex for prop firm traders trading foreign exchange. But I've modified it into futures as well. So, and we use the zoning software to do that. Does everybody understand? Give me a yes if this made sense. You know, let's run a poll and let's go back into the slides, guys. I want to thank you for giving me the time for the demo. Jim, thank you for being here. And we'll put this on the YouTube channel for you guys to learn. I'm sure it'll take some time to soak in. I mean, if there's, unless you guys want me to do one more example, do you want me to do one more example on a different market? Like, I can easily show you a different example. You know, give me another example. We'll do one more and then we'll wrap it up. Pick a market, any market, YM. Paul wants YM. Well, the S&P and the NASDAQ and the Russell, they're also correlated, right? So I would assume that the YM is probably going to, let's take a look at it here on a time chart. Take a look here and see. Yeah, I would argue that it's the same setups that happened on the S&P. And so, yeah, so let's take a look here. So let's take a look at the, like this is the YM on the 240. You come in, there's the break of structure on the 240. Right, let's just nail it down to the 30-minute. I'm looking for the last break of structure here, happened down here. We never got down into this, but like technically this is the break of structure. Okay, so if I go into the 10-minute and you look down in here, you know, was there zones in here? Absolutely there was. Absolutely there was. And, you know, I can see them. You can see them. You can see they came in. So this to me was the first zone down here, this one right here, that was below. This is the second, this is the third area. Okay, so when you look at these trade setups, the first one hit really clean. Like it was a very, very strong reaction out of that one, gave a big, big lift. Okay, then it came down into this level here and this level here. But it's the same scenario that we're having with the S&P and the NASDAQ. It's the same trade because they're all the same. They're sister markets, right? So if you're entering on this one here, right, looking at the entry, you'd still be in this trade. Yeah. And you would have already taken targets and then come down for the second entry. I like to use the zones on the, yeah, like, let me go back to this. The zones are an entry tool. The zones are the entry tool. The top-down approach is the strategy. The zones are the risk tool. The zones tell you where to be the buyer or the seller, and the top-down approach tells you how to think like a bank. Make sense, guys? Because if, give me another market, Aussie yen, somebody's Aussie yen. Let's take a look at the Aussie dollar. Didn't we just do that one yesterday there, Jim? Aussie yen.
Yeah, the Aussie dollar, yeah.
Aussie yen, that's a minor.
Mm-hmm.
So here's where everybody wants to start trading it differently. Like, see, Curtis, I'll give you an example. Like, do you ever go both ways? Take the top of the break. Like, I spent the last several months working with some very significantly powerful, profitable prop traders in foreign exchange to bring this into futures for my community. And like, there's a reason there's a strategy, right? You don't change something that's very powerful, right? So could you trade it in 100 different ways? Sure. But I think that's the reason why a lot of traders never get these huge trades or never get it, is because they always want to find some other way. I'm here showing you a ticket that can get you to your goal as long as you're willing to learn that goal, right? So not that, Curtis, you're wrong, but I just think that that's the mindset of 90% of the traders that are flipping on other ideas when there's like Willy Wonka's golden ticket is right there. right? And I think that's just natural human nature. No offense, Curtis. I got it, right? So let's take a look for 240, right? Take a look. There's a real good trade here. Opportunity happened on the 240. So we just had to break a structure up here, up here. Let's just draw real quick. Break a structure here. Let's go down to the 30. Is there a lower level break a structure in here? Sure, right there, which we could nail it down into. Let's go down to the 5 minute. And yeah, I would look to try to engage in that order block down at the lows right here. This order block is solid. Right there. Sexy, fresh order block right at the swing low on the 4 hour that is in value. So when they drive it down there, if they drive it down there, remember, these are bank levels. So you set an alert. Why? Because if the 240, if the 4 hour does this, well, guess what? You got a trade opportunity here when you set an alert level. And then as this comes up here, you map out the 50% grid. You take another trade here when it comes back. You set another alert. You move with the 4 hour. You say, well, that's not scalping. How is that not scalping? The difference between somebody that understands what scalping and day trading is all about getting involved on a day trade. But if you understand the power of patience, right? That's the concept that I'm trying to teach you, is if you understand the power of what the banks do, they're going to wait. They're going to wait. Right? They're going to wait and they're going to put in big positions in the right locations. Give me another trade. One more. Let's do pending orders work, or instead of setting alert. Yeah, you could put a pending order, Curtis. Yeah. Gold. Let's take a look at gold. Great market. We didn't talk about it. Huge trade on gold. Let's go take a look at it. Huge trade on gold. Let's go take a look at this. This is a really big trade on gold that just worked, actually. Take a look at this. Break a structure up here and here. But let's go down to the 30 minute and just double check. That was the break a structure there that led. So let's just look for order blocks on the 10 minute down here. So we'll go down into the 30. This was the break of structure, the last break of structure. You see that? I normally like to try to find like the last break of structure that led to the big move. Like that's what I'm trying to do. And I'm trying to find the order blocks that led to that. That's kind of like the way I go about this. And I use that. And so if I go down to the 10 minute, and I just look at zones here, like just take a look at this. I'm going to draw the zone here. Then there's the zone here. The order block is right there. Okay, so I'm going to just do this. We're going to go back. We're going to go back. These are the two zones. There they are. Now, there was another demand zone. I don't know if I have it turned on. Yeah, there was another demand zone here. It's just I have the settings set. You see here how there's a thrust candle here that's not highlighted. See this thrust bar? That is a thrust bar that's turned off due to the settings because I have it set to not huge thrust candles, but technically you could have that as the zone as well because there's a zone inside of there as well. And that's where they came into these areas right here. This was the bank area. Now you could argue that, you know, there was two trades here. Like you could argue the fact that like if that's the target and your target's trying to get up here at the top, like where is the rotation? This is the swing high. This broke the structure. That's the target. That's the objective high. So I would be looking to trade to that high. And what I'd do is I would grab the risk reward tool. I would put pending order in here. And, you know, I could look at, you know, going into that high right there. Like that would be the objective. And there it is. Like you're already almost at 4-hour multiples. Because that was the last 4-hour bank trade. That was the last bank trade. Like this is a bank strategy. So when I look at like, why does the market do what it does? Every day trader sitting there looking at all the little chop and slop, and they're losing so much money and they're getting ripped a new asshole. And what happens is they just don't get it. But the banks were going to move the market maybe 2-3 times a week. Like the banks are going to move the market. Like the bank moved the market here. The bank moved the market there. The bank moved the market there. The bank moved the market here. The bank moved the market here, here. The banks don't do anything in between. They do things at specific locations, and the trend is a result of what they decided to do. So they decided to put on an order block trade here. As a result of that trade, because of the amount of size that went into the market, it created a trend. And therefore, they decided to put on a trade there. The result of that trade decided to create that trend. So their next result was here. As a result of that decision, that created that leg. Right? That's, you got to think like that. Like it's, and that's what I'm trying to teach you here today, is trying to teach you how to think like them, because not everybody's trained that way. So, and our Unizone software is the answer to locating the order blocks. We will do more training on market structure. We will do more objective training on that after, guys, but I think that's a great start for a great event. Can you guys give me a yes that you found merit in this? You learned something from it. That was a huge gold trade. Like I can show you any trade, any market, because everything that I show you on the 4 hours is going to blow you away. It's just when you take it out of the day trading realm and you go into the bank level realm, it's going to blow you away. Right? So, and if you're interested in different scalping on these types of software, we use the Unizones in our prop program, and they had 6 trades, 6 wins today, scalping them on smaller timeframes as well. So Jim, I'm going to turn it over to you.
Mhm.
Thanks for letting me do the demo, guys. I know Jim and I were prepping that out and we talked about it for a while. So we got a poll
Good,
here.
good.